Well, it's time now for another Money Management Monday. Today we're talking about the home buying process. I'm joined now by Nicole Reese from Dow Chemical Employees Credit Union. Thank you so much for being here. You know, our first question I want to talk about, once you've decided that you want to buy a home, what are the first couple of steps to take to ensure that it goes as smoothly as possible, and how early should you begin taking those steps?
Sure. So it's always a good idea to get pre-qualified to find out if you qualify for the amount that you want, or if you need to find out how much you can afford. Pre-qualifications are good for about 90 days.
Okay.
So it's a good idea probably toward 90 days before you want to start looking. If you are thinking about looking further down the road, but you really don't know what you're going to qualify for, you can call us and get what's called an affordability. We don't have to pull your credit. It would just give you an idea on what you could afford.
Okay.
But once you start the pre-qualification, we pull your credit and then get you a letter that you can take to realtors and sellers to shop.
Okay, so then you're on a little bit more of a time limit there. What are some typical mortgage types or options that are available to home buyers?
There are fixed rate mortgages, and there are various term lengths ranging from 10 to 30 years. And that means that the rate is fixed for the whole term of the loan, and then there are adjustable rate mortgages, usually a lower interest rate than a 30-year loan, but the rate is only fixed for a certain period of time.
Okay. If you're simultaneously selling a home and buying a home at the same time, what kinds of special considerations are there?
So a lot of people, well, if you want to buy a home before you sell your home, you're going to need to qualify for the new mortgage with keeping the old mortgage payments still into consideration.
Okay.
You've got to be able to afford both at the same time. Otherwise, you can purchase contingent on selling your home. A lot of times you end up doing a back-to-back closing so that you close on the sale of your home right before you close on the purchase of your new home, and then you could use the funds from the sale of your home as a down payment if you'd like.
Okay, wonderful. Once an offer has been accepted, what are the next steps a home buyer should expect from there?
So you'll want to apply for the mortgage fairly quickly. You'll also most likely get a home inspection. It's a good idea. It's not something that we require per se, but it is a good idea to get one. And you'll want to apply for the mortgage pretty quickly, because usually there's a quick time frame that you need to get approved for mortgage and get moving so that you can get closed on time.
How much should a home buyer be prepared to have as a down payment, and what are some of the maybe other costs that are associated with buying a home?
So it's a good idea to have ideally 20% down. If you have less, you can do less than 20% down. If you do that, you have to pay private mortgage insurance, or PMI. It's an additional cost. With PMI, you could put as little as 5% down. You also have to consider you have to pay for your first year of homeowner's insurance in full before you close. You'll have the closing costs, which vary depending on house type and loan type and location. And then moving forward, you'll have to consider you're going to have to pay property taxes as it goes and things like that.
Yeah, planning very important. All right, thank you, Nicole, for being here. If you'd like more information about today's topic, just log on to the TV5 Facebook page after the news at 9 is over. We'll be live there answering your questions.